Welcome to the Investors Trading Academy, talking Glossary of financial terms and events. Our word of the day is Targeted Long-Term Refinancing Operation, or TLTRO. Among the measure announced, there is a variation on a theme that by now is a classic for the ECB, i.e. the Long-Term Refinancing Operation, LTRO. The 2014 version of the LTRO will be targeted TLTRO, spicing the usual LTRO. The TLTRO has been designed to work on the same principles of the BOE's Funding for Lending scheme. Under this scheme, the Bank of England's launching a funding process to help its banks to take loans from the BOE at a low interest rate, provided the banks were able to prove and show that they were lending money to their end customers. The Funding for Lending, or FLS for short, seemed to work well for the BOE, which concluded this scheme earlier this year. The TLTRO functions similarly, where banks can take a loan up to their initial allowance, which is defined as up to 7% of the bank's outstanding loans as of April 2014 to the Eurozone area in the non-financial private sector, but excluding household mortgages. The TLTRO loans have a 4-year maturity with a fixed interest rate equal to the Eurozone's main refinancing operations rate at the time of taking the loan, along with the additional fixed spread of 10 BPS. The TLTRO interest can be repaid in parts or arrears when the initial borrowing is repaid by the counterparties. The TLTRO auction or borrowing scheme would allow the Eurozone banks to borrow money from the ECB until June 2016, spread over quarterly. Banks can start to repay the TLTRO loans after 24 months from borrowing.